So let's talk about your credit score. It lets lenders know how likely you are to pay your bills on time. Seems like a simple concept, but for many, achieving a good credit score can feel complicated and sometimes even out of reach. But it doesn't have to be that way. And with April being Financial Literacy Month, I chatted with mortgage broker and credit score expert Al Bingham about credit score myths and the best way to improve your credit score.
Credit score myths. What would you say is the number one credit score myth that you have seen that people really believe?
They believe that the credit score they're following is accurate.
Okay, so now expand on that, because I know I'm a little obsessed, so I know, but everybody's not taking a deep dive, right? So you have a Vantage score, you have a FICO score, there's another kind of score. What do people need to know about the different scores? Is there one that matters more than the other? Like, break it down for us.
So there are over 75 different credit scores. 75.
Oh, I didn't know that. Okay, that's 75. A lot.
There's 16 different Vantage scores. There's over 50 different FICO scores.
Wait, okay, so naturally someone watching will say, why are there so many? So I'm going to ask you, why are there so many different types of scores? Like, it just seems excessive.
So FICO went in and they've created all these updated versions to their score models. And really, the bottom line is the major lenders have kept to the base model that they've created a couple of decades ago. So they haven't migrated to all these credit scores. So you have like Experian.com who says, come get your FICO score. Well, which one of the 50 FICO scores am I supposed to get? They don't tell you that, and they don't want you to know that. But the credit scores that they give to you are not used by lenders in most cases. In fact, I had a gentleman who went to Experian.com and he had a gentleman who went to Experian.com. He had a 596 credit score. He called me and we pulled it up. He had a 690 as a lender's FICO credit score. So the FICO scores can vary over 100 points. It's crazy.
That is crazy. So wait, so how do you know how to get a hold of the right FICO score? Like, you know, if you're buying a car, you're trying to buy a home, you've got to find a bank who's going to loan you that money for a mortgage. So how do you know which one to zero in on?
So there's contracts in place that prohibit the companies giving those actual scores to consumers. So it's really hard to get them. Unless you go to a lender, there's really only a couple of opportunities you can get the real, what we say, the right FICO scores. You can go to myfico.com. Another website that I go to is a certified nonprofit credit counselor. Back there a couple of years ago, the federal government said that the nonprofit certified credit counselors can give the right scores to consumers. So there's one that I send consumers to, mycreditplan.org, that offers the same FICO scores. And the thing that's really good about both of those websites is they're soft polls. So they're not dinging your scores to check it.
I hear a lot of people feel like debt is bad. Is debt bad across the board? We all have it. You either have a car note, you have student loans, you have something, most people. So is debt bad?
I wouldn't say debt is necessarily bad. It's managing debt that's more important. So if you can manage the debt properly, you're going to win. But when you get loans with the wrong type of lenders, when you get too much debt, when you let student loans go into deferment and you don't pay those down, those will come back and hurt your FICO scores. So it's important to manage these different, it's important for all consumers to manage this debt.
So in terms of the debt you have, is all debt created equally? Is it the same?
No, definitely not. So FICO scores look at several different factors. Now you go to loan officers and you go on the internet and they all talk about utilization ratio.
Yes.
And they say utilization ratio's got to be kept at 30%. It's not 30%. It's 5% for FICO. It's 30% for the Vantage score. So if you're following a Vantage score, your scores are not going to drop. But if you're following the correct FICO scores and you have a utilization ratio, say at 30%, your credit scores are going to drop. Your FICO credit scores are going to drop. So that's some of the misinformation that's out there.
I feel like some consumers feel like you either have a perfect credit score or bust. So do you need to have a perfect credit score to be successful?
That's a great question. No, you don't. But credit score requirements are going up for most mortgages now over the next 30 days. This is a big transformation that's occurring that hasn't happened for really about 15 years. So there are a lot of mortgages that are going to be more expensive. People are going to pay higher interest rates because they think the 720 or 740 credit score is fine. It's not. And it really needs to be above 780. So that's another misunderstanding by the consumers. They think as long as they have a credit score in the 700s, they're fine. It's not. You got to get it as high as you can.